Expectations are running high as India approaches the budget on July 23rd. The government is pushing a plan to boost manufacturing and create jobs, but inflation remains a concern, with food prices and sticking high. Our next report looks at what the government says regarding policy reforms in the budget. Take a look. As we inch closer to India's upcoming budget on Tuesday, let's put the spotlight on what the government is expected to focus on. India's government is set to boost manufacturing through public-private partnerships with a strong focus on infrastructure growth and job creation. Anticipated clean energy incentives and GST reforms aim to align with global sustainability goals. The tourism sector may gain infrastructure status to enhance accessibility and funding. Additionally, changes in personal taxation and pension schemes are expected to focus on long-term fiscal sustainability and middle-class relief. Food inflation remains persistently high, according to RBI Governor Shaktikanta Das. While the consumer price index-based inflation is moderating slowly, food inflation continues to be a major factor. Despite retail inflation easing in May 2024, food inflation remains sticky. The RBI has paused rate hikes, maintaining the benchmark repo rate at 6.50%, projecting a balanced approach to growth and inflation. In 10 years under Modi's government, significant tax reforms have streamlined the tax framework. GST implementation unified the indirect tax system, leading to impressive growth in collections. Direct tax collections have also surged with a 200% increase in net revenue over a decade. Healthcare accessibility in rural areas have improved through initiatives like PM Abhim and PMJ. Financial markets seek stability, with the government focusing on maintaining investor confidence through stringent compliance and robust regulatory standards. Business Bureau, WION World is One. And for more on this, we are now being joined by Ajay Bagga, who is a market expert. He's joining us live from Mumbai. Welcome to the broadcast, sir.
Thank you.
Now, let me begin by asking you, are you expecting any major surprises in this year's budget?
No, as your report said, I think it will be more of continuity and a balancing act. And the good thing is the government has a lot of fiscal space. One, the central bank transferred a big chunk, more than expected. The expectation was about 1 lakh crores, and instead of that, it came at 2.1 lakh crores. So that gives another 0.4% of GDP fiscal space to the government. Secondly, in the first quarter of this calendar year, January to March, the expenditure was not so much because of the looming elections. The ministries could not complete their budgets. So a huge cash balance of 1.7 lakh crores has been transferred to the government over from last year. So they are starting the year with about 1.2% extra of GDP of fiscal space. So that allows them to take all the marks that your report was mentioning. They will continue the infrastructure push, and infrastructure over the last 6 years, about 42 lakh crores has been now budgeted and spent. The capacity is straining to absorb more. So I'm not expecting much more increase in infrastructure. So that will be the continuity. Welfare schemes will continue, and there will be an added boost to the rural economy because rural consumption and the urban poor consumption, those are the two problem areas. They'll be focused on job creation, so subsidies for industries to create jobs or construction announcements. The third part will be the direct benefit transfers. We are expecting subsidies to go up. Some amount of expanded expenditure on healthcare and education. Both of those are at about 0.3% of GDP. So they are really lagging the emerging markets and developed market, competitors. And the fifth thing that we are expecting, as you already mentioned, that the fiscal glide path to 4.5% 2 years from now will be adhered to. And this year we are expecting a 5% number for the fiscal deficit.
All right. So now India's stocks markets are trading around record highs. How do you see it playing out after the budget?
Well, there's been a mild correction over the last 2 days in the Indian markets, and some sectors had got they had run up much ahead of themselves. So something like railways, defense sector stocks, public sector units which are owned by the government, those kind of stocks had run up a lot, and we are seeing some correction setting in. The budget can do only this much. The amount of money that the government earns, the amount they spend, and what they borrow from the market. So it's not going to be any magic that is going to expand. Yes, we have had two happenstances of the cash carryover and the RBI's transfer being higher. So that gives some amount of leeway. But more or less, the interim budget has set the standard. The markets are forward discounting mechanisms. So they have discounted much ahead of the budget, and this fall was on expected lines at all-time highs. We expect a period of consolidation. There could be a relief rally if there is no tinkering with the taxes. If the capital gains tax on the stock markets is not changed, I think there will be a relief rally. If there is some change and it's brought in line with the debt markets, then you could see a pretty severe fall in the markets.
Talking of the markets now, do you think Nifty can touch 30K by the end of this financial year?
End of the financial year, doubtful. I think it's already quite a lot stretched. And what will happen in the markets, 2 weeks, 4 weeks, give you a lumpy returns of the whole year. So we have had a very good run up, and mostly Asian markets tend to underperform post the US election. So we have a very big market moving election in terms of the US presidential election. You have the Fed cutting rates. Again, there's a very strong correlation. When the Fed cuts rates, markets tend to go down. So I think it's difficult for Indian markets to hit 30,000 levels by next March. Maybe by another year from now, an extra year, March 2026. It could be a better option and a better probability. But happy to be wrong on that. We will all benefit if we hit that number.
Right. Now, that was Ajay Bhagga, who is a market expert. Thank you so much for joining us on the show and giving your insights.